Thank you for everyone to attending attending or navigating down payment assistance with Chase and understanding the home financials with Ameriprise Financial Services LLC. We have a few housekeeping items. This webinar will be recorded. The recording will be on www.sanpabloedc.org. Any resources mentioned in this website presentation will be available on our website. All attendees are muted. If you're having issues with the audio, you may need to click on the webinar screen to enable the audio. We welcome your questions. Please type them in the Q&A box. We'll answer them at the end of the webinar. About the San Pablo EDC, the mission of the San Pablo Economic Development Corporation is to be a catalyst for equitable economic opportunities. Some of the programs and services that we offer are to support advancement. We focus on employment training, home ownership, business resources, and access to capital. Now I'm going to share my screen with Mr. Mark Porter, who will be presenting.
Hello, everyone. I hope everyone's doing well. Let me flip over to the presentation here. We're going to talk a little bit today about a lot of different situations when it comes to real estate. And hopefully of all the things we talk about today, one or two of them resonate with you and your family or the people that you know. Remember, the most important person in the room is you. If you don't understand what's going on, you've got to stop the paperwork and stop the signing and make sure you understand what's happening. So we'll talk a little bit about the current real estate market, real estate investing basics, and helping a family member with a home purchase. I purchased my first foreclosure duplex in 1994. Myself, I was very thankful to have the ability to get a hold of some credit and have a decent FICO score to be able to do that. And I've been volunteering, helping people do the same thing since 1994 until today. So the current real estate market, you've probably heard that it's slowed down. Yes, the reduction of the interest rates sped up the real estate purchasing and developing and all of the economy and everything like that. With the increase in interest rates, people are not able to buy such a large house. The amount of money they can borrow is reduced by a higher interest rate. My mother's first interest rate on her house was 17.5% in, I think, 76 or 77 or something. My first interest rate in 1994 was 9%. When my mother found out, she said, "How many more houses can you buy? 9% is really cheap." Now my loans are at 3.7 or something like that. And so today's interest rates might seem like they're high. They're high compared to maybe recent memory, but historically speaking, today's interest rates are fairly moderate. And if you can find a house that you can live in, you probably should buy one. Mortgage rates are actually going down now in 2024. I think they went down a eighth of a point a couple of weeks ago. Buyers and sellers are kind of on an even playing field. There aren't very many sellers and there aren't as many buyers, so there's not a frenzy like there was. We just helped a client negotiate on a house yesterday, and the previous escrow fell through. And so now the seller came back to them and said, "Hey, would you like to make an offer?" And so they did. They made an offer $20,000 below the list price because they felt like they could, since the other offer fell through, right? Prices have declined. I've seen some prices in some zip codes go down by 21% because there aren't as many buyers, and some of the sellers are in adjustable rate mortgages and they're not able to keep up. Not everyone is fully employed right now. Some people are having some struggles in paying, and so they might just want to sell that house they bought that was too large, or get rid of that mortgage they got that is too large of a mortgage when only one person in the family is working. So there's some changes there. And As we know, there aren't as many listings. You can ask any realtor about that. There aren't as many houses for sale as there was in the frenzy. I got a report this morning from a Peninsula-based realtor saying that inventory had increased in the greater 9 counties of the Bay Area by 20% last month for listings, not closings, but for listings. So some people have decided to go ahead and sell. So that's kind of what's going on with the real estate market. For those of you that are looking for owner occupied type of purchase, the time to buy is when you can afford it. That's the time to buy. Don't wait for some perfect astrological situation to happen. When you're able to purchase a home, especially with interest rates probably going down in the next 18 to 24 months, if you can afford it with today's interest rate, you'll probably refinance later. You're not building equity as a renter. I'm sorry, it doesn't work that way. So if you want to build equity, generational wealth, housing security, if you want to retire in California, you've got to secure that housing. So definitely consider that. If you're looking to purchase a vacation home or an investment property, I would say the same thing goes to say the prices are fairly moderate to a little bit lower. In some zip codes, they're 20% lower than they were last year. When pizza goes on sale, everyone buys pizza. When Nordstrom's puts shoes on sale, everyone buys shoes. Well, real estate right now in some zip codes is 20% less than it was last year. So what are you waiting on, right? So thinking about real estate in buying a second home, it's a little bit different if you're so lucky to be thinking about buying a second home. For second home loans, oftentimes the down payment is going to be a little bit higher. There are programs now, well, there always has been. I got into my first investment property purchase. My down payment was $500. That was a special that FHA had going at the time. There are some loans out there that you can learn about with Chase where the down payments are a lot lower than 20%. There are some programs out there where they might grant you a portion of your closing cost and or your down payment. And it's kind of becoming popular as well for the buyer to ask the seller to pay to have their interest rate reduced. So Denise will talk a little bit more about that when we get into the loans. But consider being an owner is better than being a renter. And with vacation properties, if you go to a certain place a lot, maybe that might make some sense for you. Some people actually retire into their second home. A lot of times, people are more experienced when it comes to their second home. They buy a one-story house in a good school district. They go vacation there, and then over the years, as their kids or family changes, they actually retire into that community. We see that kind of thing all the time. When you're talking about buying an investment property, I mean, gosh, what's better than collecting that rent and providing housing for somebody? You're actually a business owner, and you are providing housing for somebody that is not currently able to buy a house, or maybe they're not in the mood to buy a house. They're only going to live in the area for a few years or something like that. So buying investment properties, oftentimes, you're going to have a higher down payment with those many times. One way of getting an investment property in a really affordable way is to first buy it as an owner-occupied property, live in it for a year or two, and save up your money and buy yourself a nicer house for yourself and have the other property be a rental property for someone else. You want to make sure you got your finances lined up. There are going to be repairs on the rental property. There's going to eventually be a roof. You're going to have to paint the outside of the property. Appliances break down. You want to make sure you're providing. I always think of providing my renters the best experience I can as a housing provider, because I want them to be happy and take care of one of my largest assets, the rental property, right? So you want to have money available to you to be able to make repairs right away. I had a family that called me one morning and said, "Hey, we think the water heater's out." I got on the phone. had the water heater person come out there. They replaced the water heater that day. We had to pay a $200 extra rush charge, but it got done. So think about being liquid for that money. And is it the right purchase for you? Maybe it needs a lot of repairs, or it's in a out of the way location, or other problems that are wrong with the property. You may have other debt that you should take care of first, other things, other goals, and that sort of thing. And can you afford the expenses? I would say when you get the settlement statement for from the realtor or the loan person, add another 20% to that, so you can keep yourself a reserve for repairs and calamities and things like that. And can you pay 120% of the monthly? Then you're okay. And then also making a competitive offer. You don't want to be going around making an offer on all these rental properties and not being competitive with other people. You want to be able to offer the appropriate price, and you don't have to overbid in today's market, especially with rental properties, which are sometimes a little more sensitive to interest rates. Can your offer be one of the better offers for the seller to consider? The seller is going to be considering how much money do they get at the end of the transaction. So think about that as a buyer. The seller is normally going to think about how much money do I net out, and then how soon do I get my money? Gone are the days of a 90-day escrow. It's just not a thing. So talking about your finances, and is this the right purchase for you is really important. There might be expensive consumer debt that you need to get rid of. There might be some retirement savings that you're really behind on. There might be some college loans that you have and that sort of thing that you want to take care of first. Figure out what your priorities are. If you have debt that's more expensive than maybe 7% or so, that might be a place to focus your resources on, so that way you can buy a larger or a nicer property. And are you confident you can afford those expenses? You can't really delay property taxes. You cannot skip the insurance bill. If the roof has got a leak in it, if you're living there or if someone else is living there, that's really got to get fixed. And you've got to make sure that you can afford that and make it happen. And then thinking about helping a family member with a home purchase, this is really amazing for anyone to even ask you for help. But it's not always the young one that needs the help. Sometimes it's a parent. We've had some parents not buy a house until they're ready for retirement. They weren't sure where they wanted to live. They focused their money on their children and that sort of thing. So young adults and also elderly people that are relocating, they might be able to afford a house. A lot of ways to help people. What's most common is a cash gift towards the down payment. That'll have to be really documented, which was not as common in the old days, but you definitely have to source that money from a nice place that's evident and it's been in that place for a while. You could co-sign with someone. We really try to shy away from this as often as we can. Well-intentioned activities lead to challenging situations. But if you do co-sign with somebody and help them buy a property, come up with a plan, hopefully a written plan, for what happens if things don't go well, right? We believe we've got a plan for what can go wrong before we have the privilege of planning for what can go right. Plan on getting off of that loan within 3 years. Let the person know you're going to co-sign, you're going to get them in the house, but they got to keep their nose clean and they've got to behave and they have to increase their FICO score or whatever it was that caused them to need a co-signer, and that you're going to want and ask to be released from the loan or ask them to refinance so that your name is off. You could be the bank. This doesn't happen very often, but there is a website that will help everything for you, something like familylendingcircle.com or something like that. If you've got $700,000 laying around in a certificate of deposit or some low yielding situation, you could go out and and help one of the family members buy a house and do a loan paperwork and record a lien against it, and then they pay you back through that website, they get a tax deduction for making the payments because it's a lien on the property, and you will receive a 1099 that you are receiving taxable interest, just like you would have if you had a certificate of deposit. So that's one way of helping out people as well. The cash gifts are the most common because the cash is not really doing anything for you. And to be able to help a family member get into a property, that's a pretty amazing situation. But you should not be borrowing money to help someone buy a house. I know it happens, and I know people do it, but we want to think about your own financial needs first. Like they say on the airplane, put your own oxygen mask on first. You should not be borrowing money to loan someone else some money. We've got to be careful about gift tax. That's somewhere around 14,000 a year per person, or a lifetime exclusion of about 13 million. Most people are not going to be gifting away more than that, so that's not too big of a deal. But about 1 in 4 people would not be able to buy a property unless they had gotten some help from someone. So I remember when my parents bought a house, they scraped together everything they could to make it happen. And my grandmother bought the washer and dryer because it didn't come with a washer and a dryer. A little more about being a co-borrower. You are liable for repayment. So if you're going to co-sign on somebody's car note or co-sign on somebody's mortgage, how many months can you make those payments until the car gets turned in, or until the house gets sold, or until your nephew or your niece or your cousin or whoever can make the payments, right? That's something to think about. Your credit score will definitely be damaged if there's more than 30-day lates on those things. So you want to be really careful for that. You are liable for the car note. You are liable for the mortgage if it doesn't gets paid. So you want to take a look at doing that. Making the mortgage payments are really important. You could be the lender, of course. We talked about that a little bit before. Not as common in this part of the country, but in other parts, we've had people move into other parts of the country, and somebody might loan them $100,000 and they could buy a house. There are parts of the United States where $100,000 buys you a house. If you have that much money, you could loan it to a family member. So putting your own finances first, of course, like we said, put your own oxygen mask on first. If you don't have the money to pay your bills yourself and have savings put away for a rainy day, that's going to be a problem. So talk to somebody, probably someone like Denise or Ray over at Chase, to talk about what your goals are and how a real estate purchase fits into that, because you may not be ready for that kind of thing right now. And we definitely want to get together a plan to try to get you ready for a real estate purchase. Or we could decide that it's not for you right now and you have to take care of 4 or 5 items first. And maybe we'll say, hey, let's come back and revisit this in about 18 months, right? That might be a plan. And that's okay. It's really good for you to know exactly where you are. So if you have questions for me, see if you can put them in the panelist thing there. But up next, we have Ray with Chase Bank, I think. There we go.
Yes.
Good evening. Yes, I am here. Uh, Thank you, everyone who has joined today's webinar. My name is Ray Hollins. I am the community manager for Chase Bank. I also have with me our community home lending advisor, Denise Richardson, to provide you with information that you're looking for on home lending. The reason why we connect with organizations to provide you with this information is because we know that it's useful information and it's needed. And so what we look to do is not only provide you with the information to assist you with your home journey or just your financial journey in general, but in addition to that, provide you with resources. So at the end of this workshop, if there's anything in here that piques your interest or you want to know more about or you want to stay connected with Chase and learn about some of the many resources that we'll be talking about today. There will be a link in the chat that I'll drop at the end of our workshop, and you'll be able to connect with either me or Denise or somebody on our team to provide you with those resources that you may be looking for. So let me go ahead and share my screen, and we'll go ahead and go over some of the things that we have here today that can benefit you in your financial journey. All right. All right, here we go. Denise, you want to kick us off?
Yes, thank you so much, Ray, and thank you everyone for joining. It is my pleasure to share some information that we have available at Chase for home lending to make home lending affordable. Next slide. As our clients, there are real benefits that you have with us. Not only do we assist with home buying, but we also help you with auto financing, business banking, card services, and we have a host of tools to help you get prepared for home buying. Just like Mark spoke about earlier, there are some steps that you want to make sure that you're aware of, and we have plenty of tools available at chase.com that will help you in the areas of budgeting, figuring out where you stand credit-wise, and things of that nature. We also have tools that help you determine what your affordable payment would be. So we have a affordability calculator to help you in the privacy of your home play with the numbers, because you personally know what your income is and how much you have going out, to help you figure out how much home you can afford. Now, our goal as Chase is to put home ownership within reach for every person. And the way that we do that is a variety of things. We offer a Chase Home Buyer Grant, which I will jump into later. But a few of the mortgage programs that we offer help make purchasing your first home, second home, more affordable. So the first thing I want to lead with is our Chase Dreammaker home mortgage. This mortgage actually is something that we have coined and personalized and made it our own. What we help our clients with is making the down payment as low as possible. At 3%, we will help you get qualified for a loan so you can purchase your first home. This is pretty unusual because typically other programs go as low as 3.5%. So this helps you if you don't have a lot of cash, but you have enough to get started and get your foot in the door. This is a great opportunity, a great product to use. The other thing with Chase Dreammaker, we allow you to go up to 50% debt to income ratio. So what that means to you is that after you take a look at the income that you have and you subtract what your potential mortgage rate, your mortgage payment will be, your taxes and insurance on a monthly basis, and what debts you may have, is that going to eat up more than 50% of your income or less than 50%? So we give you a little bit of wiggle room because we do know that things are expensive, and that also allows people to be able to prepare for their monthly payments and make sure that they are not going out of whack so they can keep and retain their home. Another program we work with is the Federal Housing Administration loan, which is commonly known as FHA loan. This loan allows you to put 3.5% down, and it has the backing of the Federal Housing Administration to help support and qualify our customers to get qualified for a purchase. We also have our standard agency loan, which is typically known as a conventional loan. This allows for our customers to take advantage either with a low down payment or a higher down payment. The good news with this is that with the more down payment that you put on your purchase, the less payment that you would have. Sometimes when we are putting less than 20%, there is something that is embedded in your payment called mortgage insurance, and that can also affect your debt to income ratio. So having this conventional standard agency loan actually gives you a little flexibility to put more down and avoid mortgage insurance. And then lastly, we have our U.S. Department VA loan that we do. And this offers low to no down payment depending on the qualifications of our vet. And we actually specialize in this area. We have a special heart for our vets, and we also help with not having any type of mortgage insurance on that. So depending on what your qualification is with your entitlement, we can help you navigate getting pre-approved and fully underwritten for your home purchase. So I mentioned earlier, we have our Chase Homebuyer Grant. And our grants range anywhere from $2,500 to $7,500, depending on the address of the potential property that you're looking to buy. So these grants can be used for a variety of ways. You can use it to offset your overall closing cost. I have many clients, especially in this day and age with their interest rates, they use some of that grant money to buy down the interest rate, making the interest rate lower, which in essence will make your monthly payment lower. In addition to our homebuyer grant, we also offer $2,000 specifically for our VA loans. So if you are a vet and you're taking advantage of our VA loan, you will automatically get $2,000 that you can use towards closing costs. And you can use that on top of our Chase Homebuyer Grant if the property that you're looking to purchase qualifies for the grant. So those are our ways that we are helping making home ownership more affordable. Another thing that we like to do is to make sure that our customers are prepared to go shopping for their home. Sometimes the purchase is a first-time purchase, sometimes it's a forever purchase, or you may even be considering an investment purchase, as Mark was speaking about earlier in this presentation. What we do is we like to make sure that our customers have an advantage by getting them fully pre-approved for their loan. What this does, it helps you as the consumer get an idea of how much you can comfortably afford. It also gives you an idea on what type of, how high of a purchase you want to make. It also gives you peace of mind knowing that you have financing prepared and ahead of you. So when you are shopping, or even if you're out on a whim and you happen to see something that you really, really love, our Home Buyer Advantage helps you get prepared, and you know exactly what you're buying and you know exactly what you qualify for, taking the stress out of the home purchasing process. In addition to our home buyer advantage, we offer something that's called lock and shop. And what that does for you is, in this environment where interest rates are kind of volatile, they've been as high as 8%, and they've been lower than right now. We're sitting around upper 6 to 7%. And that can be very concerning for a first-time home buyer or anyone who's shopping to purchase. So our lock and shop program allows you to actually lock your interest rate once you get that fully underwritten pre-approval, to knowing that you have peace of mind, so that interest rate is locked for you. So whenever you do go in contract and you find that property that you are in love with, you have peace of mind that your interest rate is not high. Well, excuse me, it hasn't moved from the time that you got pre-qualified. Now, the great thing about our lock and shop program is if you go into contract and the interest rates happen to be a little bit lower at that time, then you have the ability to unlock the rate and relock it at the lower rate one time during the process. And this will allow you to save some money on a monthly basis when it comes to doing your monthly budget and how much of house you can afford. So this is a great way that we are helping our first-time home buyers as well as our multiple-time buyers feel comfortable with the interest rate while they're shopping. So some of the pressures of purchasing a home is not only getting qualified for the loan and making sure that you can afford the down payment and your monthly payment, but also is making sure that you get everything done in a good amount of time and that you fulfill your end of the bargain when it comes to the contract. Most times when you are purchasing a property, there is a contract that you come into an agreement with the seller that you will have all your financing in place. Appraisals will be done. All I's will be dotted, and all T's will be crossed by a certain date. And that time frame can range, depending on the type of loan that you get, can go up to 45 days. Now, if you decide to do a financing with us with either our Chase Dreammaker or our standard agency loan, we have something that's called a guaranteed on-time closing, or you get $5,000. And what that means to you is that we guarantee that we will have your loan closed within 21 days. And providing that everything is in on time. So every party is doing their part to make sure that we're closing on time. If for some reason we close late and it's due to an error on Chase's part, we will pay you, the borrower, $5,000. And the great news about that is we're actually increasing that dollar amount starting April 2nd to $20,000. So what that means to you, in essence, as the buyer, is that we are going to have all hands on deck to make sure that everything is taken care of when it comes to your home financing and getting everything closed on time, and that you're keeping your end of the contract when you go into agreement with the seller. And so this gives you a little bit of a chart on how we can ensure that we are closing on time. So the step one is we want to make sure that you get pre-qualified with the mortgage. So we want to make sure that we are setting up the right expectations for you on a monthly basis, that the payment fits within your budget and you feel comfortable with that payment. Once we get that taken care of with you, we go into step two, which is to finalize your purchase mortgage application with making sure that we have documentation to prove your income, to prove your down payment, to prove that your credit worthiness. And so Mark mentioned earlier, which was a valid point, and you want to make sure that if you have any debts out there that's causing a lot of expense on a monthly basis, this is the time for you to kind of identify and make sure that you get that taken care of before you move forward with a full mortgage application. And so once we have that full mortgage application, we move into step three, and we will go into making sure that we are in contract, and we will move forward with your appraisal, make sure the title is clear, to make sure that you have the ability to close on time and get your keys per your contract. So the way that we help our customers is to make things as efficient as possible. We all have busy lives, and not everyone has the ability to walk into a branch to actually complete a formal application, bring their documents. We're just busy people. Our society is just busy. And so to help streamline that process, we offer Chase My Home. This is the portal of where you can gather all information about mortgage loans, about your individual loan process. This is where you can apply for your mortgage from the comfort of your home. You also have the ability to take a look at various tools to check out the interest rates, to make sure that you have access to your pre-approval letter and your offer letter. It's also a safe portal that you can use to upload your documents. So it's super secure. It's just between you and Chase, and there's no way, there's no avenue for you to worry about if someone else has a copy of your documents. We hang our hats on customer privacy and security, and Chase My Home provides that for you. It also offers some feedback for you. So if you're shopping in a specific area that you're interested in, gives you some idea of what home values would be, what recent sales might be. There's also an area there where you can check out schools in that area if that's something that's important to you. There's a lot of great tools at Chase My Home. So oftentimes when we are thinking about purchasing a home, we think about the financing piece of it, and then we need to go out and purchase a home. But it is wise, and I encourage you to work with a established real estate professional to help you pick out the home that you want, but also bring your attention to things that you want to be aware of. And the way that we help our clients choose a realtor, a real estate professional, is we have something called Chase Agent Express. And Chase Agent Express is a program that allows you to tap in to real estate professionals that we have actually established partnerships with, and we've done backgrounds with. We know the level of customer service that they'll give, if they specialize in first-time home buyers or if they specialize in investment property. It's a great database of real estate professionals that will help you walk through the home buying process. They know exactly what to do. So if you need various inspections, if you need to, if there's a specific area that you are honing in on, that you saw on Chase My Home and you really, really, really want to buy in a certain area, we will tailor a real estate professional for you, so you can have someone that's on your side, making a team helping you purchase the home of your dreams. The great thing about our Chase Agent Express program is that at the close of business, if you get your financing through Chase and you use one of our Chase Agent Express real estate professionals, then you could be eligible to receive up to $5,000 at the close of your transaction. And so what that does, it gives you extra money to either buy some things for your home, help with moving costs, or even if you want to jumpstart with paying down your principal, you can take that money and start paying down your principal. But it's our way of making sure that you are fully taken care of with professionals and a team to achieve your home ownership goals. I did go over quite a bit. This is my information. You're more than welcome to email me, but I just want to kind of recap everything that we discussed today. So we have our Chase closing guarantee, which again, we're saying we're going to close your deal within 21 days. Otherwise, we will pay if there's an error on Chase's part. We have a variety of mortgage programs that can help that we can customize for your needs, leveraging our Chase Home Buyer Grant. We have our Home Buyer Education program that Ray can talk a little bit about. And then we also have our Cheering Maker product that will help some of our customers who are looking to purchase, but they don't have a lot of money to put down. We do have a variety of programs with our Chase Private Bank, as well as a variety of lending assets with leveraging your assets to purchase. We have our Chase Home Buyer Advantage program where you can get fully pre-approved, making your purchase process a lot easier. And we have programs where we partner with builders and condos. We also help with real estate agents and our Chase Agent Express. And that is the end of my presentation. Unless there are, if there are some questions, please put it in the chat and we'll be happy to help.
Thank you, Denise. Last thing that we wanted to close with, we don't want to just leave you with information. We also want to make sure that you all have the resources that you need. So in the chat is a link where you can enter your information, and we'll be reaching out to you in the next 24 to 48 hours. If you have any questions, if you're ready to make that step, maybe you want to get pre-qualified, maybe just want more information about some of our educational workshops, you can click the link, enter your information, and we will be able to provide you with the information and resources you're looking for. One of the mistakes that I always look back on is just not getting more information or not taking the steps to get to where I wanted to be. And one thing that I always say is you don't know what you don't know. And so allow us to provide you with the information and the resources that you may be looking for to assist you in your financial journey. So I thank you for your time. Thank you for everyone who joined our Chase presentation today. And so I will kick it back over to San Pablo EDC.
Thank you, Ray and Denise, for your presentation. Does anyone have any questions for either Ray, Denise, or Mark Porter? If you do have questions, please put it in the Q&A, and I'll give it a minute to see if anyone does have questions. Okay. I don't see any questions, but I do have a question, or possibly other people on the panel may have, that are here, is Denise. If someone has the 3% down payment, what type of FICO score are we looking at in terms of being able to qualify for a mortgage with Chase for the 3% program, given that it's address-based or region-based?
Yeah, great question. We go as low as 620 FICO score.
Thank you. Okay, well, I do not see any questions in the chat. I don't know, Mark, do you have anything else you'd like to add? No? Okay. Ray?
The time is now, everybody. If I can say anything, like Ray said, you don't know what you don't know. You got to get together with Ray and Denise and talk about where you are right now. First of all, tell them what you want. You can want anything. You can want anything. I wanted a fourplex. That's what I wanted. I ended up with a duplex. Hey, not bad, right? So you can want whatever you want, and then these people here are here to help you get what you want. I mean, that's what life is all about, is us helping each other get things that we want. So you've got to reach out and sit down and talk to people about what you want, and then they can put some things in your list of things that you might need to accomplish. Who knows? Maybe you're ready to buy a property now. You just didn't know that you could. I remember helping a previously disabled veteran's widow get a property many years ago. She did not know that she qualified for a certain kind of loan because she was married to a disabled veteran, and he had passed away 10 years ago. But a clever loan person like Denise asked her the right questions, and she said, oh yeah, my husband did serve, and they had to get some paperwork together, but she was able to move into Marin County from Southern California because of an amazing loan person. And you've got to get in here and meet with these people so you can figure out where you stand. So the time is now, people.
Well, thank you everyone for your presentation, taking the time to be with us this evening. And also those that are attending, thank you to all. Have a great evening.